Okay, we need to get right into it. We need to understand what our 1099 tax bill consists of. Like, how does the government arrive at the amount that I need to pay them? What is up, everybody? My name is Tyra and welcome back to Keeper Tax, your one-stop shop for all things 1099 taxes. Here on this channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who should be filing 1099 business taxes. In today's video, we will be discussing breaking down your 1099 tax bill, what goes into a tax bill, and how do we know where our money is going and what taxes are we paying. So I am so excited to share this with you guys, but before we continue with the video, you have to understand that your 1099 tax bill is more significant than you think. Unlike a W-2, there is no tax money withheld automatically. So if you're ready to learn how to break down your 1099 tax bill, keep on watching this video. Many of us already know what a W-2 is. The W-2 is a form that reflects the annual compensation that businesses pay their employees and the tax deductions from these compensations. So if you worked a retail job or an hourly job, like you worked at Subway, then 9 times out of 10, you'd be a W-2 employee and receive a W-2 in the mail at tax time. You know, when the first year folks see their 1099 tax bill, the most common reaction, myself included, is, oh my God, that's a lot of money. Listen, I feel y'all, I was in that boat as well, but for every first time 1099 tax filer, the 1099 tax rates are typically much higher than W-2 income taxes. But why is that? So it's because of the dreaded 15.3% self-employment tax, and this extra tax is applied before the standard deduction, and we will touch on that a little more later. So let's break it down. There are 3 parts to your 1099 tax bill. The first part is the self-employment tax. Like I said, the self-employment tax is currently 15.3%, and this just includes the Social Security tax and Medicare taxes paid in full. But for people who have a W-2 job, your employer pays half of that for you. But we as 1099 contractors are required to pay the total amount on our 1099 income because we don't have an employer, so we are responsible for that ourselves. The second part of your 1099 tax bill is the federal income tax. So this rate depends on your income tax bracket. For 2021, there are 7 brackets and the rates range from 10% to 37%. So make sure that you check and see what your state laws actually are. And the last part of your 1099 tax bill is the state income tax. So these work just the same way as the federal, except without the self-employment tax. The state income taxes tend to be a lot lower than the federal taxes, and of course, some states don't even have them. So the state income tax helps to fund the budget of the states, and the state uses 3 approaches to tax its residents or workers in that state. So you can be taxed in any of these ways. Number 1, by placing no charge on income at all, or the progressive tax, where people who earn more money pay higher state income tax rates. And the third approach that states use to tax people who live there is the flat tax. Now, we have to be careful because if you're moving from state to state and working in these states, you can be taxed multiple times because each state will tax your income according to their laws. So take being a brand ambassador, for example. I have a friend who is a brand ambassador, which is a 1099 contractor job, and she travels for work. She's from Louisiana like me, and she ended up working a long-term BA job out in New Jersey. The job lasted for like 4 months. So she ended up filing taxes in both Louisiana and in New Jersey. So keep that in mind if you're bouncing around from state to state. And this can also apply to you if you have things like rental properties in different states. If you're making money in multiple states, the government will tax you accordingly. The main takeaway that we need to understand here is that you need to pay taxes on your 1099 income even if your income is less than the personal standard deduction. So this is because there are two types of itemized deductions. There's the personal and the business. The standard deduction only trades off with the personal itemized deductions like charitable donations, medical expenses, property taxes, and so on, but not with your business expenses like supplies, software, Wi-Fi, and all of that stuff. So this means that even if you have a 0% income tax rate, you still owe self-employment taxes on your 1099 income independent of the personal standard deduction. And that is why everyone with 1099 income, no matter how much it is, should be claiming tax write-offs, because that self-employment tax will definitely sneak up on you. And it is the key to having a reasonable tax bill. That is all that I have for you guys today. In the comments below, please let me know if you have any questions about anything that I mentioned today in this video. And if you would like more easy to digest tax content, make sure you give this video a like. And if you're not already, make sure you hit that big red subscribe button down below and make sure your notifications are on so you can get all of the alerts so you can stay up to date with all things self-employed taxes and all things keeper tax. Thank you all so much for watching this video, and I will see you in the next one.